Okay, T accounts. Does that look like a T account for you?
Yep.
Yeah.
Okay, so T account, and we're gonna call this account inventory. Correct? So our inventory account is gonna have its beginning balance and ending balance, correct?
Correct.
Correct. Now, here we're gonna have new account, which will be our cost of goods sold. Do we need cost of goods sold? Obviously, we need it. Why? Because
Yes.
first we have sales or revenue, then we're gonna have cost of goods sold. So once we sell the inventory, that inventory has become cost of goods sold. Make sense?
Yep.
Okay, so far so good. Let's put this shape here. So once we sell the inventory, since we are a merchandising company, that inventory become cost of goods sold. And we're done. So we have to buy it or purchase. First we're gonna purchase, and then we're gonna sell it and become a cost of goods sold. Make sense? Now let's see how the P account works. Beginning balance plus debit is always equal to credit plus ending balance. This is the basic equation. So this side is, as you already know, that's your debit, and on the other side, that's your credit. Right? Now, what we can extract from here? I can do this. Beginning balance plus my purchases, it's always equal to my cost of goods sold plus my ending balance. Correct? Are you with me? Can you guys
Yeah,
hear me?
makes sense.
Yes.
Okay, let's test it because you can say, "Ha ha, you teacher, you're lying to us. That's impossible." So let's test it. Let's say beginning balance is 5, ending balance is 10. My purchases are 60. Can I calculate my cost of goods sold? Well, if I use this equation, what will be cost of goods sold? It will be equal to my beginning balance plus the purchases minus
Cost of goods
what?
sold.
No. I'm chasing cost of goods sold.
Ending
Oh,
balance.
okay.
My ending balance, right?
Okay.
My ending balance. So let's see. I'm chasing cost of goods sold. How can I find it? First, we're going to start beginning balance. Then we're going to add purchases. Then after I have those two, I'm going to put a new line, which will be my inventory available for sale. Correct? After deduct less, what I have to deduct? Ending balance. I'm going to get cost of goods sold, correct? Make sense?
Yeah.
Okay, let's put now the numbers here. My cost of goods sold should be equal to what?
5 plus 60
5
minus 10
plus 16 minus 10 or 55. Right? Why is that? Because now 5 plus 60, that's 65. 55 plus 10 is 65. So that means beginning balance plus the debit is equal to credit plus the ending balance. Make sense?
Yep.
Okay, let's put it here. Beginning balance is 5. Purchases are 60.
60.
How many I have available? 65. But once I count my inventory, I found 10. What's happened? How many I sold? Minus that one. So I sold 55. Make sense?
Yeah.
All right. That's something new for you. How we can interpret all this? Very simple. Imagine this. You have in your pocket $10. You want to go for shopping in Metrotown. You withdraw $100. You went to Metrotown. You spent $80. How many dollars you have in your pocket?
20.
Sorry? So let's go again. You have in your pocket $10. You withdraw 100. You spend 80. How many dollars you have in your pocket?
30.
30.
10.
Is that clear for everybody?
Yeah.
10.
Yes, sir.
So let's make another one. You have in your dollars $20. Pocket. You have in your pocket $20. You withdraw 200. You went home. You went for shopping, and after that you went home. You went home and you found in your pocket $10. How many dollars you spent?
210.
Isn't that look like a cost of goods sold?
Yep.
So that's how difficult it is. So every time when somebody asks you how to calculate cost of goods sold, what do you have to do? Go to Metrotown. Make sense?
Yeah.
Make it simple. Make it simple. I want you to make it simple. Beginning balance plus the purchases, how much I have available, minus the ending balance, how much I spent, or how much I sold in this case. How much is cost of goods sold? This is for the merchandising company. Now let's see how this is going to work on the manufacturing company. In the manufacturing company, we already said we're going to have 3 inventory accounts. One will be raw material. The next one will be work in process. And the last one will be finished goods. Now, from where the cost of goods sold is going to come? They're going to come from the finished goods. Because I cannot sell raw material. I cannot sell work in process, something which is in the middle, but I can sell finished goods. Make sense?
Yes.
Okay. So I want to sell those finished goods. But in order to sell the finished goods, I have to produce them, correct? Because I'm not buying them. I have to produce them. In order to produce them, in order to have a product, how many costs I need? I need 3 costs. I need direct material, I need direct labor, and I need that manufacturing overhead, correct? Once I have those 3, I can say I have a product. Make sense?
Yep.
Now, the question is, from where the direct material is gonna come? Well, from the
Raw
raw material.
materials.
Perfect. So, from where the raw material is gonna come? Now I have to purchase it. Make sense?
Makes sense.
So, having in mind that this has beginning balance, this has beginning balance, this has beginning balance, and they all have ending balance here, ending balance. Is it okay if I keep you for another 3 minutes?
Yep. Just take your
So,
time.
Okay.
okay. So the question is, how are we going to get this cost of goods sold? Well, this cost of goods sold will be easy. Now I'm going to have beginning balance of the finished goods. Then I'm going to get the cost of goods manufactured, right? I have to get those goods manufactured somehow. But that comes with the cost. We're going to call it cost of goods manufactured. Then I'm going to have finished goods available. For sale. But I don't want to keep it. Once I deduct the ending balance, I'm going to get my cost of goods sold. Make sense?
What would be the
That's-
difference between the finished goods available for sales and the beginning balance for finished goods? Aren't the beginning balance for finished goods already available for sale?
Say that again. So listen this. What will be the difference between the beginning balance? Beginning balance I may have in the beginning of the period only 5. But
Okay.
during the period, I can produce another 30.
Oh, okay. That makes sense.
Make sense? At the end of the period, I check I have only, let's make it 10. I have 10. So my available for sales are 35. Make sense?
Yeah.
That will be the difference. The 30 is the one that I'm going to produce. How I'm going to produce it? By getting it from work in process. Means that I have to have in work in process, I have to have direct material, direct labor, and manufacturing overhead all together. Otherwise, it's not going to work. So I need those cost of goods manufactured to come from this account. So I need direct material, I need direct labor, I need manufacturing overhead. But that the material is going to come from the raw material. So from the raw material account, I'm going to get beginning balance of the raw material. And I'm going to add the purchases. And I'm going to have the raw material available. Oops, not here. That will be raw material available. And then I'm going to deduct the ending balance of the raw material. And we're going to have the raw material used. Or direct material used. Make sense?
Yep.
That will be ending balance. So once I get the direct material used, to direct material use, I'm going to add direct labor, and I'm going to get the manufacturing overhead. And I'm going to have the product cost for the period. Then I'm going to add the beginning balance of the working process. And I'm going to have product cost available to transfer. Make sense? Because now I'm getting those three plus the beginning balance. I have what I have to transfer further, to process further. Make sense? That will be total product cost to transfer. And once I deduct the ending balance of the working process, I'm going to get cost of goods manufactured. Make sense?
Yep.
So here we're going to have this line. Here we're going to have available less working material use, product cost for the period, that the variable, total product here, and cost of goods manufactured. Those cost of goods manufactured after that's going to move right here. So it's right here, and we're going to get our cost of goods sold, which we want to get. That's how many things we have to do in order to get the cost of goods sold. Let's put in some numbers. Let's say our raw materials are 20. Then we purchase 80. And at the end of the day, we have 30. So here we have 20 and 80 purchase. So how many we have available? 100. We at the end of the period we check we have 30. So how many we used?
70.
70. So now we have here 70. Let's pretend direct labor is 50 and manufacturing overhead is 30. We need the beginning balance, which is 5. And our ending balance is, let's say, 10. So what we're going to do? We're going to add here. Oops. Let's move those one from here to move them right here. So now we're going to add the direct labor, which is 50. And manufacturing overhead, which is 30. And then we're going to have all those three. Product cost will be 150, correct? Once I add the beginning balance, which is 5, I'm going to have available to transfer 55. Ending balance is 10. So how much is my cost of goods manufactured? 145. Make sense?
Yep.
You guys with me?
Yes.
Are we gonna have these slides available on Moodle?
Absolutely.
Awesome.
Awesome.
You already have this calculation. Now I'm recording it with this Excel spreadsheet. So you're going to have the recording and the Excel spreadsheet all together. So what's left? Since we know that my cost of goods sold manufactured is 145, that's not 30 anymore. Let's get rid of that 30. That's 145. So what's happened here? I have to plug the numbers. That's all. Correct? 5, 145. How many I have available now for sale? 150. My ending balance is 10. How many I sold? Who's going to tell me?
140.
140. That's how we get your cost of goods sold. First one is called schedule for cost of goods manufactured, because end up with the cost of goods manufactured. This one, once we add the cost of goods sold, is called schedule for cost of goods sold. This is the one that you have to do on your assignment. and for your midterm exam. That's it for today. I'll keep you 10 more minutes, 10 extra minutes. Let me stop the recording.